Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In this video, I'm going to take a look at what 2023 really was. From an investor standpoint, it was a remarkable year. I'm sure that all of you will agree with me that investment performance in 2023 has beaten all our expectations. Whatever we expected 2023 to be at the beginning of the year on Jan 1 has been surpassed significantly. So, as an investor, this year has been a very productive year, a very gratifying year, and a very happy year. I'm sure it is for all of you. Yet, investors always look to the future. We think that what happened in the past is something that we earned. We believe we deserved the investment performance that we got. There is some element of truth to that expectation or belief, but we cannot extend that belief automatically into the future. Sometimes some years give us returns lumpily, taking in advance what should be investment performance in the future. I suspect 2023 was one such year where future investment performance got advanced and reflected in this year's investment performance. So, in that sense, probably what should happen a year or two down the road has already happened in 2023. So, what should an investor do? Should you sell all your equities and move out, or should you do something different? Selling and going out of equity as an asset class is not an option simply because you don't have alternatives. The only viable alternative today for an asset switch that I see at today's valuation is debt. Even there, we need to take a shorter duration view of debt because inflation is still not globally controlled to a level at which we can be sure that interest rates won't go up any further. You may be surprised I'm saying this because the Fed has signaled that it will reduce interest rates multiple times, 3 in the year 2024. But still, inflation is a beast which can really go out of control, and I would not say anything until it has been definitively tamed. So, in that sense, I feel that is something that you need to watch closely and not think conclusively till it's over. It's not over till it's over. So, in that sense, even in debt, you should have a shorter term view of things and you can move some equity into debt. That's the only switch I can see. As far as gold is concerned, gold has already run up significantly for 2 years in succession. It went up in 2022 and in 2023. Will it run up again in 2024? As of now, it seems that that's quite possible, but we can't be too sure about that. Essentially, that leaves us with only one option in terms of risk mitigation at the portfolio level. That is, you can reduce a little bit of equity and increase a little bit of debt. So, the debt equity in your portfolio, the allocation between debt and equity can be changed a bit. That's one thing that all investors can do. But within equity also there's a lot you can do. One thing is you can move money into defensive sectors. I know that the moment I say defensive, people jump into IT, which is basically offering services to global companies. But I would think a little differently in this. I would look at investing in domestic services companies, inward facing ones. I would look at banks as an option. I would look at pharma as an option, and I would look at any other bottom up theme or sector where valuations are reasonably in favor. Surprisingly, we are able to find a number of opportunities which are defensive, where the valuations are gradually coming in our favor. So, one has to be very selective within equity, move money from extremely overvalued parts of the market to reasonably valued parts of the market. Doing this will give you some sense of defense in your portfolio, so that if the market is going to correct, your stocks will fall less. Essentially, my expectation out of 2024 would be to hold on to a good part of the gains of 2023, lose less, and invest more when the valuations turn more attractive and in our favor. The hat that one wears as a professional investor or an individual investor is no different. One has to think the same way if his conviction has to deliver. You can't have different folks you can't have two strategies, you have to have one strategy. And my one strategy would be to move my portfolio into a safer zone, buy relatively cheaper companies of a certain quality. I won't want to buy companies which are not of a good quality simply because they are cheaper, but I would like to buy the better companies at a reasonable valuation, and I'd like to wait to buy more of them as the markets come more in our favor. So, holding on to the gains of 2023 would be my primary focus in 2024, and selective participation would be the watchword. I would want to be very selective and I would want to participate. These two are the watchwords for 2024. Importantly, we should not set expectations in 2024 by taking the performance of 2023 as a guidance. I think that's very, very critical for all of us, whether you are individual investor or professional investor. Expectations should be moderated and one should be ready to wait longer to invest money itself, which means that money should be given more time to deliver returns. So, it's a two-stage process. First, you take time to invest money in a more rehearsed and gradual way in 2024, and then wait much longer to see the results from your investments. Effectively, your investing has to happen continuously, but at a pace which you are comfortable with and with no haste in decision making. That's essentially how I see 2023 and position myself for 2024. Thank you for watching this video.